Welcome to the Market Mystics podcast. I'm Joshua.
I'm Kim. Let's dive in.
Hello, everybody. Welcome back to the Market Mystics. Kim and I are here with someone who I'm really excited to have a conversation with. Kim, is this our first interview of the season?
This is our first interview of the season, so we're really honored to have you here, and this is a special one.
Yeah. So today we are joined by the lead trader for the Blockchain Saints, and if you don't know what that is, we'll have some links in the description, but you'll get to know a little bit more through this interview. But it's such an honor to have you here with us. We're excited for this conversation, and we're excited for the wealth that you carry to be shared with our listeners. Welcome.
Oh, well, thank you so much, Joshua and Kimberly. I'm pleased to be here. Thank you so much for inviting me. It's an honor. It's my pleasure. And that I'm the first. Come on, man. That's fantastic.
The first of the season.
You just let anybody on this show, huh?
We've had a couple others scheduled and they just keep getting delayed. And now you're here. And I think it's perfect. It's the best fit for it.
Awesome.
So we always like to start, not always, but often in interviews, my favorite question to ask people is, if someone was talking about you behind your back, how would you want them to describe you?
Oh, that is a wonderful question. Because usually we have a much higher opinion of ourselves than what other people do. But I would like people to say that that he was a great motivator and he was a great leader, and leader in the right sense of that word. That he actually cared about the people that he guided and led down whatever paths he led them. That's pretty much that would be the music to my ears if I was eavesdropping, I think.
Yeah.
I love that.
That's such a good way. Like, kind of tying into that, would you share just a little bit of your history, what got you interested in trading, what got you interested in crypto?
Yes, absolutely. So, this literally goes back to my late teens into my very early 20s. I joined the military. I was broke, didn't have a lot of money. I came from very good Christian stewardship home, but they weren't wealthy. But my dad was very good with the way he managed his finances and managed his money. And as a new kid on the block, going out doing my own thing, I wanted to have everything that I had when I left home. So I took on a lot of debt, started going crazy, buying stupid stuff, doing the dumb stuff, and then I met a girl, and I was like, I'm broke. I have nothing to offer this lady. You just kind of get that wake up call. And life hits you square in the face. And it hit me pretty good. And I realized that I was not set up for marriage. And I was not set up for the future in any sense of the imagination. As a matter of fact, I had done a lot of damage, which really would have put me behind. And the reason for that is they don't teach this stuff in school. None of this stuff is taught. There's almost no financial instruction, guidance, wisdom being taught. And honestly, there's not quite a lot of it in churches either. You get a lot of messages on tithing and this, that, and the other, but there's not a lot going on in my religious community growing up and in any of my education on this. So the way the magic started, I have to go to how the magic started, was, to be honest, we did get married, and my wife was working at Applebee's. And so when I got off work at the military, I was working days at the time. When I got off work in the military, while she was working at Applebee's, I went to Barnes and Nobles, and I would sit there for 4 to 6 hours a night while she was working. And I was reading book after, because, they got the couches in there, Barnes and Nobles, etc. Right? They got the couches. So you don't put couches inside unless you want people to read your books inside. This is how I looked at it. So I didn't buy a single book. I went and read them right there in the store and put them back on the shelf. But I ended up reading a whole lot to begin with, like how to get out of debt first. And then I started getting into mutual funds, and that grew into, well, what else is there, and into how to handle insurance and blah, blah, blah. And then I got into, things like stock market and trading, investing, and I was consumed. Like by the time I was done, it was a part of me. Like just from the reading, it was a part of my soul. I knew I belonged in this niche, even though I was in the military. I've always had hustles and side gigs and so on and so forth. So I dove face first, feet first, face first. I don't know, belly flopped right into the pool of trading, finances, investing. I did it all. I did everything from mutual funds to doing some long term investing, then some trading, and I was really into a whole lot of. And I built up. I made a lot of mistakes, but I did a lot of great things. You know, I got out of all that debt, started to make some headway and some foundation. And I really cut my teeth during the dot-com era. So yes, I'm that old. I'm 50 years old. So I was a kid in the dot-com era, but a young adult in the dot-com era. And that's really where I cut my teeth. I started a company called the Optimist Trader, where I began to teach people how to read charts, how to interpret charts, how to use the price action to make decisions, whether it's long-term or short-term. Also, I had a side gig where I was so good at doing fundamental research. And fundamental research is different than chart research because fundamental research is kind of getting into the weeds of what a company does, what their asset sheet looks like, their liabilities, who their company is, what their team looks like. It's really that gritty work on a company. And so I was really good at that. And so I was actually selected to find small caps for hedge funds. Hedge funds actually paid me to go do the homework and the research, to go do this, find these gems called hidden gems and then present them. So I did that for a while as well. And that whole era built the person that I am today. And then, then the stocks progressed, trading progressed. I kept getting better and better. And then crypto happened. And this crypto niche, the reason why I jumped into the crypto niche is because for the first time ever, I was presented with, and anyone that approaches crypto is presented with literally something no generation has ever seen before. And that is the potential of generational wealth. And that's what crypto has represented for every cycle that I've been through. And I've been in crypto since 2016 cycle. So, close to 10 years now in the crypto niche. I've been through many cycles, many bulls, many bears, the whole 9 yards for crypto. But seeing that opportunity, seeing that it was quite different from stocks in the vast amount of wealth one could accumulate in such a short period of time, and seeing that there was a cycle to it, there was this repeatable wash, rinse, and repeat thing. It was great. It was brilliant. Now, and as anyone that knows about crypto, it has been littered with landmine after landmine after landmine. It's why most people don't come into the niche, because there's a lot of fear because of the things that have happened. The FTX, the great collapse of the FTX exchange was one of the big ones, which occurred at the end of the last bull market into the bear market. And that really shot a lot of people and cut a lot of people up. And, once they're damaged like that, a lot of them run away and never come back.
Right.
So this is just one example. We've had many of these, crazy things, landmines, you'd call them, in cryptocurrency that really keeps most of the population afraid of it. Fast forward to today, and we have this, all of a sudden, this economy, this political agenda, this political regime that is now making all of us crazy people from 2016, because in 2016, we were known as insane. We were the insane. We were the crazy people playing scams. These were all scams. Everything was going to zero. Bitcoin was going to zero. Everything's going to zero. It's just one big scam. Fast forward to today, and now all of a sudden it's like, oops, wait a minute. The government now has a Bitcoin Federal Reserve. And by the way, over 33 United States have applications in their House and in their Senate for Bitcoin strategic reserves. Like, the times have changed. And here's the crazy thing, and then I'll let you talk because I know I've been talking. Here's the crazy thing. The kicker is, even though this is happening right in front of everybody's face, right under their nose, even though this evolution of the digital future is happening now, globally, only 6% of the world owns cryptocurrency. So that's why I tell people that come into it right now, look, compared to me, you're a noob. Like, you're new. You're new, you're like the rookie, but compared to the rest of the globe, you're a pioneer. So even people coming in right now, they are still pioneering this space, because as far forward as we are, only 6% of the world owns any crypto. And here's the one that's really going to blow your mind. Bitcoin has achieved the number 8 ranked most profitable asset on the planet. It's number 8 by market cap, with only 4% of the world owning it. If that doesn't blow your mind, or if that doesn't tell you what it's capable of, what happens when a larger percentage of the world owns this? I think we're going to see Bitcoin achieve a mark. By the way, number 1 is gold. The one right in front of Bitcoin right now is silver. So Bitcoin's number 8, silver's number 7. And the other 2 companies that are right in front of them are barely in front of Bitcoin. We will see probably in the next 2 years, Bitcoin is probably going to go from number 8 on the list to easily breaking into the top 5 on this list of global assets. So, yeah, so hopefully that answered your question. Plus, 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 plus. I don't know.
You talked a little bit about some of the like scams that have happened or just the failures within crypto, which was interesting. You brought up FTX because on my drive home from work, I listened to an interview with Sam Bankman-Fried. So it was very timely to bring that up. But I'm just curious, like, with all that's happened, what made you see legitimacy in cryptocurrency back then and now? Like, how are you picking like exchanges to best protect yourself?
Yeah, that's a great question. And unfortunately, that is the risk with all new technologies. Everyone is like, oh, if I would have bought Tesla when it was $5. Well, here's the thing. It sounds great on paper, but the problem is when Tesla was $5, it was risky.
Mm-hmm.
It just was. It was the new technology. Will it make it? Will it not? Are people going to buy e-cars? Will they not? Like all of those schematics, that people now don't see because it's the future. When they're looking back, they don't remember that part. And so with any great investor that wants to make it big, you've got to be ahead of the crowd. Like you literally have to. And that requires what? Risk. All right, that it requires risk. So it's not like unabashed risk where we just throw all caution to the wind and we go crazy. We still want to use discernment and these type of things. But when you are looking at, the fact that the way, and most people don't know this, but not everyone's an economic expert. But if you were to look at America's economics and the fact that the dollar has been devalued since it lost the gold standard, the value of a dollar bill is 3 cents. From when we lost the gold standard. That's fact. That's not fiction. That's not even debatable. A dollar, and then that's why would I still have a dollar? You're looking at it wrong. Yes, you have a dollar, but it's what is it buy versus what it used to be able to buy. That's why they can say, well, a dollar's worth 3 cents. So that is the proper format to look at the value of a dollar. So all these people that are afraid of risk assets and crypto and this, that, and the other, I have to ask them, well, how is your dollar? And most of them don't know. Like they don't know that this is what has occurred. So all of the people are like, well, I keep mine under the mattress. I mean, for me, you don't even equate to the person of the parable of the talents, because at least he gave back exactly what he was given. Yours depreciated, so you can't even give back what you got. Like for me, that religious paradigm doesn't work. And so that's what I try to relay that in kindness when I hear that, because I hear that stuff all the time. Isn't it safer to just, no, it isn't. Like, but most people aren't plugged into the global economics. And what we do know about US economy is that it can't survive the way that it is. It must transition into something that is sustainable. The way to do that is what's happening right now. Cryptocurrency, I've always envisioned and knew that blockchain would actually be that. Now, what would that look like at the end? I didn't really know. Now we know. For example, we know stable coins are literally the future of digital cash. So how does the dollar survive? Because remember, stable coins are designed to mirror the dollar. So here's how that works. This is how you now bolster the dollar under something else. Because remember, we didn't have anything else. We lost the gold standard, and now we just print. We just print. And I don't know, most people don't know this, but stable coins, they can burn it. So they can print and burn. What does that do? It lets them maintain a 1-to-1 coin to asset ratio. So for every stable coin that Tether prints or USDC prints, they must have an asset to back it, 1-to-1. Well, if all you can do is print and you can't burn the dollar, what happens? It can't let depreciate. Like it's all it can do. So the transition is to find something that can back the dollar that's worth it. And what we're finding is stable coins now are actually buying US debts. They're buying US treasuries on their asset sheet. Before, only nations and banks could do this. Only other nations and only banks could buy US treasuries. And people are always like saying, well, oh no, China's not going to buy our treasuries anymore. Or Russia's like, well, we're just not going to buy US debts. Guess what? We don't need you to anymore. If you look at the asset sheet of USDT, billions in dollars of treasuries on their asset sheets. And hundreds of these stablecoins are being built. Bank of America just last week says we're going to make a stablecoin. Why? Because they all know it is the future, and it's the future of a digital dollar as well, without being a central bank digital currency. You know, we said no. Trump, one of the greatest things he did when he came in was say no to a CBDC. Europe, on the other hand, is pushing forward an agenda of a central bank digital currency. And what that does is it gives all power. It's the ultimate spy tool. But not just the ultimate spy tool, it can be then controlled. I can literally stop you at the register from spending it. I can pull taxes out and instantly without you filing anything, because I see every transaction and I'm controlling every transaction. So you have these other nations, Europe, some of the other nations doing the CBDC portion, which gives them ultimate control. But then you have the United States of America said, no, we're not going to do that. We are going to continue to be democratic, a free nation, but have a way to where we can back our currency with assets. And that brings me to the next part of cryptocurrency. One of the main reasons why cryptocurrency is here to stay is because its job is going to be to tokenize, or to put every asset that we know of on the blockchain, whether it's real estate, stocks. By the way, US treasuries are already being put on the blockchain by a crypto company called Ondo, a US-based crypto company. So the future of all assets is for them to be tokenized and placed on the blockchain. The future of stocks are to be tokenized on the blockchain. They're already talking about doing, because stock markets are Monday through Friday, and they have opening and closing. They're changing that. They're going to be 24/5. So they're going to run 24 hours, 5 days a week. And as you all know, cryptocurrency runs 24/7. So you can see the evolution. Crypto's been way ahead. Everything else is coming. Everything's going to align. And by the end of August, Trump will have laid out niche benefiting regulations. See, because before we had this political regime, we had a political regime and an SEC that attacked the crypto industry relentlessly. Machine gun lawsuits to every exchange that you can imagine. And they used the FTX crash to do so. So they created all this hell and havoc to where we're restricted to like only a couple of exchanges in the United States. What's happening right now? All of those lawsuits are getting dropped left and right. And the SEC has just announced that they're thinking about foregoing all of those rules and regulations on exchanges having to file for regulations, which is going to bring back all of the exchanges that left. KuCoin, Binance, all of these other ones, all of them will be able to come back and operate. And so we get that system healed back together. And the kicker is now when they do regulations, and we've already seen it, we saw it at the crypto summit, the White House crypto summit, my gosh, I never thought I'd ever be saying a White House crypto summit. Now you have regulators, SEC, CFTC, bringing the heads of crypto companies to the table for regulations versus because they were crying out for help from the SEC, crying out, help us. And the SEC said, no, you should know. Here's your lawsuit, and now we have this whole new regime where they're being invited to the table. You have XRP guy, you have Coinbase guy, Link guy sitting at the table. You got MicroStrategy guy there, Michael Saylor, all sitting at the table, bringing their heads together to benefit the investors, to benefit the crypto space, and to benefit the nation and the future of our economy. My goodness, I don't know if I answered your question. I've been talking forever. Hopefully I don't know if I answered your question.
No, I think you did, and a little bit more, and it left me with a dozen other questions. However,
right.
We started this by calling you the lead trader of the blockchain saints, and I wonder if you would just touch on that just a little bit, what is the blockchain saints? What motivated you to start that kind of program? What is that program? If you just touch on that just a little bit.
Absolutely. So based on all the nightmares that I just talked about, that is why blockchain saints exist. We want to be, the vision is to truly be the lighthouse so that people don't have to navigate this landscape, the cryptocurrency landscape, on their own, and make it affordable, okay? Because the program that we offer is multifaceted. Not only do you get to see the portfolios that I'm running, you get to see our long-term stuff and our short-term stuff, but it's all run on Telegram. So we have 2 Telegram channels. The other one is constant crypto education. So what's going on left and right. You know what the new laws are, what the new rules are, what's coming. I'm generally way ahead of what's happening in the space. So I try to keep everyone in there ahead so they know why we're doing what we're doing, why the future looks this way, and then how can we profit from that? How can we be best positioned to be ahead of that? The key to any new technology, they're all high risk when they're new. They all have landmines. They all are filled with these risks. But those risks lead to incredible amount of reward if you can get ahead of them, be positioned wisely, and here's the kicker, way ahead of everybody else. 6%. Even after everything I just told you that's happening right now, most people don't even know this stuff's happening because they don't know anything about crypto. But it's happening right under their nose. That's why people are like, oh, I'm never going to get involved in crypto. I'm like, your ass is getting dragged into crypto. That's what's going to happen. Whether you like it or not, you will be operating with crypto. Sorry. And I don't usually say that. I generally try not to be offensive. I just laugh inside. I'm like, you're coming to crypto. You're coming to crypto one way or the other. If we have to drag you kicking and screaming, and for a lot of people, that's how they're going to come to crypto. But for everybody else, only 6%. And these are things that are going to be happening. So if you can be positioned before the masses, and here's the other thing, before Wall Street, this is why this cycle, the one we're in right now, is probably the most important, and in a way, the last cycle we'll ever have. The reason is because the highways and byways of Wall Street to get money, institutional money, into a niche like cryptocurrency, they do it through a thing called ETFs, electronically traded funds. Companies, industry, smart money, they don't go open a Coinbase account. That's not how they're going to do it. They wait for a Wall Street product that is regulated, approved, thumbs up, good to go. Then the institutional money, the smart money, the massive amounts of money from companies, organizations, yes, retail as well. By the way, when I say retail, I'm talking about the little people. And even as much as I trade, I'm still considered retail. But smart money, institutional money, these are the conglomerates that can move price. Okay, so this is the type of money that is getting ready to come into the crypto space. We have literally 30 plus ETFs filed for altcoins. Things like Sol, XRP, HBAR. I mean, you name it. They're there. They haven't been approved yet. Once they're approved, that Wall Street money is going to come flooding into the space. And we're here first. So we're already positioned. We're already ready for this. But this is what is coming in the future. So Blockchain Saints is really about helping people that don't know what to do, that want to be educated, and they get to see what we're doing. So if they want to copy that, not only can they copy it, but they'll know why we're doing it. Every portfolio that I put out there and every position I put in there, I explain why. Why am I doing the thing called the vault, which is, for me, is probably going to be one of the best things I've ever done for this cycle. Why are we doing what? And what about the positions we're putting in there? Why are we putting those ones in there? Everyone's going to know. It's not like I'm hiding it from them. It's literally, I'm literally showing them what this company is doing to forward crypto into the future. And then we do have higher risk stuff that is going to be coming. We're waiting on the market to trend before we start doing that. The market's in a very nice pullback right now, more or less a correction, less of a pullback, more of a correction, which puts prices at right where, well, I mean, Wall Street's coming. Wall Street does not buy high. You know, a lot of what's going on with prices right now is market manipulation. For Wall Street to bring their machines in, and I can't do a class on it right here, but they have a way of suppressing prices until their machine is here and they can get their institutional money in, and then they send prices. So this is kind of like what we're dealing with right now. And what that does is set up the retailer who understands this and sets them up for the ability to buy things low. The problem is that's not how it works. Psychology works against you. Psychology works against folks because everyone, you know, what was his name? Some of the greatest investors of all time have said things like, you know, the name of the game is the buy low, sell high. That sounds so easy until you actually go look at what you have to do. Because in order to buy low, you have to buy when it's nasty. You have to buy when there's blood on the street. Like, that's how it works. So your psychology is like, oh, hell no. This is horrible. We got a major market crash. The sky is falling. Do you see the contrast to the paper that says buy low, sell high, to really what happens when you're looking at it? Nobody wants to do that. Instead, everybody buys the giant green candle. Everybody waits till things are rocketing and things are making new all-time highs. And then they wonder why they don't make any money. So this is the conundrum. And this is the difference, the true difference between institutional smart money and the retailer. The retailer, their brain just doesn't work the way that it's supposed to work for them. So that's another reason why I exist. No one's ever going to see me panic, no matter what the market is doing, whether it's crashing or whether we're going nuts. That's what markets do. So Blockchain Saints is really just that education, man, to put people's minds at ease. There's always a risk. You know, you want the 100% plus returns. That doesn't come without risk. It just doesn't. There is nothing like that exists. The parable of the talents, for crying out loud, is a story about risk. Like, it is. The one that took none. The one that took none, like he literally gave back what the dude gave him, was the one that got his taken from him. Like, but we can do so in a way that stewards and use discernment and from a viewpoint that's plugged in to what's going on globally. And I stay as plugged in. I'm probably more plugged in to what's going on the global front. The reason is because everything's coalesces. You know, it's not crypto over here. It used to be. Like in 2016, yeah, crypto was over here. Everything else was over here. Guess what? Not anymore. Not anymore. The things that are going on globally and the things that are going on in the United States and the things that are going on with the crypto, they're all coalescing. They're all interconnected. And unless you know all of these things and can see what's going on, you don't know what to do. What do I buy? How? I mean, should I buy now? Like, what does the future look like? So that really ultimately is Blockchain Saints, man. It's trying to be that lighthouse, if you will, in an otherwise stormy, unknown territory, which is going to become very known within the next year, like extremely known. We're talking about regulation documents by August. Like, this is huge. And so we're watching the evolution. If you asked me a year ago if things would be happening this quick, I'd say no. I'd say 2028. But it's happening now. Like, it's blowing my mind. So yeah, does that help with Blockchain Saints?
Yeah. When I've told people about it, so I've been part of one of your programs for 5 months now. And within that time, like I've seen some gains, but I've also seen the market have a what you call like a correction, like pretty substantial. And one thing that I've appreciated about being part of your program is kind of like the steady voice of like, hey, just wait. Like, you got to have a bigger picture. You got to have a bigger perspective. And so when I've told people about Blockchain Saints and the opportunity to follow just your education and your alerts and your mentorship, like I've told them, like, the biggest thing you're paying for is that like good shepherd who's like been through the storm a time or two, and who can, like, when you're terrified, I think you use the term like, I've carried you through the storm. Like, when the stocks are dipping, when crypto's dipping, like, you're the quiet voice that's like, it's okay. Like, it'll be all right. Don't panic. Don't jump out of the boat. Just stay here for a moment. And so, like, in that thought, like, we're gonna jump over and do some bonus content for our members on YouTube. But before we do, I have like one question, and you touched on this a little bit with like crypto's gonna drag everyone in, and we're early adopters. But if you are someone who is sitting on the fence with crypto, like, what would you how would you encourage them to jump in, and like what might that look like for someone who's brand new?
Yeah, wonderful. So we split our portfolios up 80-20. 80% is long-term positions. And the key to that is you don't have to buy the bottom. And I'll give you an example, especially in crypto. There's people that buy these investments for long-term for the crypto. And when I say long-term, we're talking about for the cycle. So I project this bull market to run deep into 2025 and possibly the very beginning of 2026. But when you're buying these positions for long-term, I've seen positions go down 50, 60%. And then in a year, they're up 500%. So this is the volatility of crypto. It's more a matter of being positioned than it is thinking you're going to time the bottom. And so what I tell people is, you want to be diversified. So when you come in, you really want to be focused on most of your cash and most of your money on longer term stuff. And you can buy these things slowly, and then if prices continue to dip, you can average down. So that way you don't have to time the bottom. You can just buy a little more as it dips. And then the trading aspect, for the active trades, we only do that when the market's trending. So right now the market is in a corrective move, but when we begin to trend up, that's when trading works. Trading works in waves. The idea that people have to be trading all the time, that's actually not how it works. But it's very effective in a trending market. So when crypto does flip and begins to trend bullish again, for the rest of the cycle, trading becomes very lucrative and very, very possible. So again, we have both of those opportunities, and you don't even have to come in and trade at all. You can literally just come in and focus on vault positions. And just to talk a little bit about the vault portfolio is literally a portfolio that we have that's based on only hardcore US-based cryptocurrencies that are intricately involved in the evolution right now, intricately involved in this transition from what we thought the economy was to what the economy is going to be doing. So let's go back to that thing I mentioned, buying Apple and IBM and Tesla for $5 a share. This is the opportunity that you're looking at. Plus, only 6% of the world is here. So imagine the type of money that's coming into these legit crypto-based businesses that are part of, intricately intertwined with the evolution of money in the United States and the Wall Street machine that is literally being set up now as we speak. Within the next 2 to 3 months, we will probably start seeing altcoin ETF after ETF after ETF approved. And guess which altcoins they're going to approve first? The ones we're putting in the vault.
Mm.
So for me, I mean, when it comes to risk versus reward, doesn't get much better.
I love that. I love the whole concept of blockchain saints. And so I want to honor you for stepping into that role and like making it happen. I can't tell you how many people I hear of, I talk to, people who come to us who want to get started in crypto and don't know where to start, or are too afraid to dip their toe in, or have no clue, have all of the fear in the world, but know that it is the future. Yep. And so just setting up something to make it accessible. And I mean, this is something that we talk about all the time, kind of demystifying it.
Yeah.
Because it goes from that, that ideology of, Bitcoin's a scam.
Yep.
Right? Where everyone thinks that you must be doing something nefarious if you have anything to do with cryptocurrency. And that just isn't the case. And so I really honor you for carrying this and investing even so much of your life up to this point to be where you are and positioned as you are to be able to really help the kingdom, help the normal person get on the front end of this. It really is. It's remarkable. And so I thank you so much for being here. Really honor you for what you're carrying and what you're doing, and sharing your wealth with the world.
Yeah, thank you. I mean, I'm honored to be invited, truly honored to be invited. That really is what it comes down to, without knowledge, my people perish. It starts there. We have a 3-layer thing that's behind everything. Knowledge is at the top, but it stops there. Like, you can't stop there. You can stop there. Knowing a thing is not doing a thing. Knowing a thing is knowing a thing. But you've got to have that. So once you have that, then you're presented with what? Opportunity. So now you see the opportunity. So now you have the decision of the talents. You're the person that has the talent, the opportunity. And then finally, lastly, is the risk. And this is where it gets personal, because not everyone's in the same financial situation. Many people are in debt and need to get out of debt. Many people don't have a lot of money to invest. So everyone's risk level is going to be different. It's not going to be the same. And I do want to speak to that real quick, the risk. Here's how that works. Most people think if I don't have a lot, that I can't afford to take risks. It's actually the opposite. It's actually the exact opposite. That is when you do need to be taking the risk. That is when you do need to be swinging bigger bats. As your wealth grows, and that pool and that pile gets bigger and bigger, then by the nature of the fact that wealth is growing and building, that is when you begin to reduce your risk. How do you do that? By diversifying, by spreading out amongst other assets, having precious metals, having stocks, having crypto, having real estate, having land, having businesses that produce income. This is how that's done. When you hear that Joe Blow is worth $21 million, this is not in cash. That's the cash amount. Trust me, if you go look at the asset sheet, the majority of that, I would probably say 75% of that is in assets, not dollars. It's in things like precious metals, stocks, real estate, business, land, so on and so forth. So So that's how risk is approached. If you have little or you have less, you swing big bats, man, because you can afford it. Like, because you're starting from zero. You're not, it goes like, what do you have to lose? You know what I mean? Mm-hmm. Where when you have a lot, well, you got a lot to lose. So you're like, we need to reduce our risk. So that's how I would address, I think, those things, knowledge. But knowledge is just knowledge, opportunity. But we don't throw caution to the wind, risk. So we need to assess our ability and our tolerance for risk and how we're going to proceed.
That's so amazing. If anyone is interested, we'll have the link to Blockchain Saints in the description of the show. But I just really want to honor and thank you for the time that you've spent with us here. We're going to have a couple other questions for you in our member section. If you guys want to hear that, subscribe to the channel, become a member, and you can hear that bonus section as well. But yeah, just thank you so much for your time today. It's been a true pleasure to speak with you.
Thank you for having me. I appreciate it.
All right. Thanks, guys. We'll see you next time.
Thanks for tuning in to the Market Mystics. If you are hungry for more, don't miss out on our exclusive bonus content available only to YouTube members. Demystify the world of cryptocurrency in the cryptosphere and explore everything from outrageous conspiracies to curious current events and out there spiritual musings. Nothing is off limits in Let's Get Weird. Become a channel member on YouTube to unlock these extra episodes. See you in the bonus episodes.